What's up, guys? Today I'm going to be going over the simplest way that I've found to use the unicorn model. If anybody else has a different way to use it and or wants to give me some constructive criticism on how a better way to use it would be, you can definitely let me know in the comments below. But this is how I use it, and I'm going to show you how to use it so you can go see this on y'all's charts. So this is a list of everything I look for. First, I use my daily bias. I usually find that on the daily. You can also use the weekly. You can sometimes use any of these higher time frames, but I just use the daily. And then go to a higher time frame PD array that is swept into and respected. So essentially, that is just say the 1 hour sweeps into a fair value gap, takes liquidity on the lower time frames, and then draws higher. Right, so anytime you sweep into a fair value gap, anytime you even trace into a fair value gap, you're usually going to be sweeping some sort of liquidity. So then you have a change in the state on the 5 or the 15 minute, depending on what you use. You're also going to get a market structure shift. So the change in the state is pretty much just going to come automatically when the breaker block is formed. I just put this in there because it's a confluence I use, and why not? So a breaker block. If you do not know what a breaker block is, I will show you. There should be a lot of videos on YouTube that explain breaker blocks pretty well, but I'm going to give you the kind of simplest way I can teach y'all the ways that you can use this and how to find them. So then you'll have a fair value gap on the lower time frame, retrace back into the fair value gap or breaker, and then that'll be your entry. So okay, I'm going to go ahead and get rid of this. Actually, let me show you. So first I go to the daily bias. I find the previous day range. So the previous day low and the previous day high. We have swept the previous day low inside of this fair value gap. If you don't know what fair value gap is, it's pretty much just a gap that's formed because of inefficiency in the market and usually gets respected as support or resistance. So like this is a fair value gap. Obviously it didn't get respected, but this one seems to be getting respected. So then my overall bias is bullish because if you look at the trend here, you always want to go with the trend. Simple as that may sound, trend is your friend. So trend is bullish. Looks like we're respecting here. Lower time frame's been, lower previous day low has been swept, and we're creating a bullish candle to the upside. So I'm gonna go ahead and get rid of all this now. And if you need to, you can go back and screenshot all of those confluences so you can go study each and every one of them on your own. Hopefully I can have some videos explaining all these confluences at some point. This is my first video, and this is just the model I use. Okay, so then I'll go to the 1 hour. I will see if we were respecting or just tapping into a bullish fair value gap because my bias is bullish. So we'll check. See, we have a bullish fair value gap here. It's getting respected. And I think, okay. Bullish fair value gap getting respected. Now let's go down to the 5 or the 15. And with this, let me go ahead and show you what a breaker is. I'll go ahead and show you all the confluences. So we got a low, a high, a lower low, and then a higher high will be created once we change state of delivery or get a market structure shift, which this is from today, so I do know what happens here, but this market maker model does work. If you don't know much about market maker models, I would recommend you go learn about them. They're pretty simple. If you're pretty familiar with ICT, then it'll be pretty easy to understand. So this is our breaker. I'll mark this out. There's different ways people mark these out, I've noticed. Some people say to mark it here, some people say to mark it at the close of these candles. I just tend to mark it from the move up and the bodies of the candles. If anybody knows the actual way to mark out a breaker, please leave that down in the comments because I've been confused here lately about how to mark those out because every video I have ever watched says something different. So, but anyway, you have the you have the overall range of where the breaker would be. So when it does tap back into it, you'll also be using a fair value gap to help you with this breaker as support. So I wouldn't really worry about that too much. All right, now go ahead and play forward. There we get a close above. And then you want to see a retrace back into the fair value gap, which I don't think, yeah, we did not retrace into it. Well, is it a, it's not a fair value gap. Go to 5. Usually I use a 5 anyway for precision entries. So we have a tiny fair value gap, barely a fair value gap here. It gets tapped into, wait a little bit longer. There we get this tap into the breaker. Now I'm pretty sure that we created, okay, so we're starting to form a fair value gap on the 1 hour. So now after that, I would enter long right here at this retest. Also this fair value gap inside of this breaker, that's probably your best bet, to be honest. Okay, and then I would put my stop. Yeah, see, it goes right into this fair value gap. And I put my stop right below this breaker. And then I would target generated buy side. Okay, and you can either target this generated buy side, you can target just this high. You can target this, you can go all the way up here and target this. I think price actually does end up coming all the way up here. I'm just going to use this for a realistic example of how I would take this trade. So, and if you do use other tools like the fib and standard deviation, you would put the fib at the bottom of this manipulation leg, put it at the top right here, and you would see price went right into the equilibrium. Now a lot of people use OTE, which is between 0.79 and 0.62. A lot of people use OTE to find an optimal trade entry. That's what that stands for. I don't do that unless on maybe occasion I will, but you won't find near as many setups with that. And if it goes below this breaker, you know, it's probably going to just drop anyway, so it really doesn't matter. But as you can see, hit TP there, barely any drawdown. This is a very solid model. If you can master this model, if you're just starting trading and you're jumping around with different strategies and don't know what to do, study ICT's market maker models. He has different models inside of the market maker models, but I've learned that the unicorn model is one of my favorite models just because of how it performs and how comfortable I am with using it. Hopefully I will be able to make more videos using these confluences I showed y'all today. If you have any questions, leave them in the comments. Like I said, any constructive criticism is definitely welcome. Hopefully I'll be able to make more videos soon, and hope y'all enjoyed. Yeah, have a good one.